The naira was slightly weaker yesterday, 157.85 according to Stanbic IBTC, but like you mentioned, 157.70. So slightly weaker compared to what we saw late last week. But clearly, the naira has been on a bullish run for most of this year. It's obviously trending quite a bit this year. Joining me in the studio to give me, or rather joining me at Stanbic IBTC this time around is Samuel Ocheho. He's regional head of trading, and he's going to give us some views on the naira and, of course, the fixed income market. Sam, it's good to have you on the show today.
Good morning, Wole.
All right. First of all, I want to get your thoughts on the naira and your thoughts on where it's going. Now, when I spoke to an analyst earlier this year, they did mention that the April-May season may be a time where the naira will be tested. But so far, we've seen it strengthen quite a bit. It's been quite firm. And the point the analyst was making at the time was that this is a season where we'll probably see a lot of multinationals repatriating money out of Nigeria, taking out dividends, and that may put some pressure on the naira. Are we seeing those outflows at all?
Well, I would say the analyst as of January was probably right, because as of January, the naira was hovering between 160 and 162. So naturally, it would seem that the month of April and May, which is the month where a lot of these multinationals remit dividend, would put a lot of test on the naira. But apparently, between then and now, we've seen the naira strengthen. We've seen it come to 157 level, and since March to date, it's been hovering between 157 and 158 levels. Before now, it was at the lows of 157, that's 25-30 levels, and that has been supported largely by the offshore inflows we've seen in this market. If I may put figure to it, I think we've seen over $2 billion of offshore inflows between March and now, and that is very significant. That has assisted in keeping the naira at its current level. But in the last week, we've seen the naira depreciating to weaken slightly to 85-95 level as at close of business yesterday. And that's because the level of inflow has been slightly moderated between last week and now. So if you ask me, a lot of dividend remittances have been done. Most of the major companies have outflowed significant volumes, but because of this offshore inflows, we've not seen the move, the naira weaken as the analysts would have expected it to weaken. And so I want to say the offshore inflows have contributed largely to the stability of the naira at the moment.
All right, so what you're saying is that we've seen the impact of the outflows. But of course, you mentioned that the inflows, $2 billion, that's significant over the last few months. Where exactly is this money going? Many people are talking about treasury bills, but of course, we also have the equities market.
Well, with the way the equities market is at the moment, I think significant volume of this flows. The $2 billion, in my opinion, is very conservative, but we've seen more of it in the treasury bills market. The offshore investors have been more short duration. They've not really played in the long duration market. We've seen part of it also going into the equities, but I think I would say it's more a 70-30 kind of split between equities and the money market at the moment.
All right, let's talk about the fixed income market. And of course, the Debt Management Office is expected to have that auction tomorrow. What trends are we likely to see in that auction?
Okay. What they have on offer for tomorrow is the 2017 bond and the 2022 bond. They just have about 35 billion on offer on both, from which is a total of 70. In this May, we see about 236 billion of maturities coming back into the market. So if you ask me, I think a lot of those people want to refinance their portfolio. They want to put this money back into some of this, into the auction of tomorrow. So my outlook for the auction of tomorrow is that it will hover around 15.15 to 15.2 for the 2017 bond, and probably 15.4 to 15.5 for the 2022 bond. And that is just because I think they are all going to be oversubscribed, in my opinion.
All right, of course, we've seen most of those auctions oversubscribed recently. But let's talk a bit about what I'm hearing around the DMO's policy. And I'm hearing that there's something talk about a bond switch for maturing bonds in 2013. Can you explain a bit about that?
Well, the bond switch is a new product that is being introduced by the DMO, It's part of their liability strategy, liability management strategy. All they are trying to do is to manage the amount of outflow they are going to be making in 2013. We have a lot of bond maturities in 2013, and what they're trying to do is to refinance it into longer-term bonds. So what they are offering a switch program where banks who are willing, it's very voluntary. Banks who are willing to sell their 2013 bonds will sell to the DMO, and then on the other hand buy long-dated bonds. I think the 2017 bond and the 2022 bond. So any bank that is willing will just bring whatever volume it intends to bring from its short-dated 2013 bonds and switch it into the 2017 or 2022 bond. And I think the DMO, they are going to be doing a pilot sometime this month if everything works out well. And for them, any amount of success is a success. I guess on the long run, it is going to remain part of their liability management strategy.
All right, let's talk about inflation. I mean, the April inflation numbers are expected to break in a few minutes. Give us a sense of your expectations for those numbers and what the impact will be on the bond market.
Okay, already I think we're beginning to see figures around 12.9 for the April numbers. It was 12.1 the last month, and if you ask me, that is not going to materially affect what is going to happen in the market. The market has already taken a conservative view, even from the CBN governor's comment and other analysts' comment, that they see it printing at between 14 to 14.5 in June and July. At the moment, 12.9 is still below what is expected of market. So I don't see any risk sell-off because inflation is printing at 12.9%.
Okay, so what you're saying is that analysts are projecting an upward trajectory for the inflation rate, moving up closer to 14%, like you mentioned. But what will be the impact of that on bond yields in your view?
Well, if you ask me, the real interest rate is still positive even at 14%. So if you ask me, they're projecting an upward trajectory up to June, and then we'll begin to see it moving towards a single digit if the CBN governor's comment is anything to go by. So we'll see it moving towards single digit. And if that's the case, I just think it's just a short-term blip, in my opinion. And then the long-term view is that there's going to still, interest rates are still going to trend toward downwards.
All right, Sam, thanks so much for joining us. That's Samuel Ocheho, Regional Head of Trading at Stanbic IBTC, giving us his thoughts on the fixed income and, of course, the FX markets.